Welcome, ladies and gentlemen. And today, this panel, we're going to talk about investments. And we have reputable investors from funds, from ecosystem, and also from exchanges. And briefly introduce myself. I'm Sierra Sam, the founder and managing partner of C-Square Ventures. We are a early stage crypto fund, and we aim to provide not just crypto capital, but also operational expertise for our portfolio companies. And prior to fund C-Square Ventures, I run listing, investments, and global markets for Huobi. Glad to be here, and I'll let our panelists briefly introduce themselves.
Cool, thank you. My name is Arnav. I'm a partner at Bankless Ventures. We're an early stage crypto fund. We are spun out of Bankless Media, which maybe a few of you have heard of the podcast before, but yeah, super excited to be on the panel today.
Hi, my name is Nenter. I'm the global CEO of Bitmart Exchange. We've been around for the past 7.5 years, about 3 to 4 billion daily spot volume, 26 billion perp volume. Pleased to be here.
Hello, everyone. My name is Marco. I'm the executive director of the ZK Sync Foundation, which was formed 1.5 years ago when we launched a token. We do a bunch of things from the foundation, one of which is investing, mostly in our ecosystem, but also a little bit outside.
Great, thank you. So we've had quite an interesting year, right? With the beginning of the year, we have a new crypto president selected in the States, and we've seen witnessed the interest cut and a lot of things that happened in macro and in crypto investment, specifically some data in Q3 2025, fundraising hit about 8.2 billion. It's the highest quarter since 2023 early. And year to date, 2025 is already near the record level of 2021, which is roughly 27 billion totally raised this year. Amazing numbers. So I want to ask you guys, what have you guys been looking into for investment, and where are your capital going the next 12 to 18 months? I'm gonna start.
Cool. Yeah, I think there's a few areas which are super compelling to us. The first one is still definitely tokenization, specifically the tokenization of latent asset classes, things that are not globally available already. A great example, if you are even a US citizen, even if you're an accredited investor, it's very difficult to get access to private credit. But on the other hand, private credit funds also want to grow their AUM. So it becomes a very efficient conduit to be able to tokenize certain funds, certain asset classes, and grow your AUM as an issuer. And as a user, be able to access these asset classes you couldn't before. So I think that's an entire spectrum of things to be able to invest in, and it's a very exciting, honestly, just asset class for us to be allocating to. Probably the second area, which is very interesting, are what I like to call speculation markets. I think as we've seen with Polymarket and Kalshi, that these things are monsters, raising at like $10, $15 billion valuations within the span of the last year or so. And beyond that, you have platforms like Hyperliquid, which just surpassed the NASDAQ in net income, which is just monstrous. I think there's a whole spectrum of things that are going to be built here as well. A good example of that would be something like consensus markets, opinion markets, and regulated perp dexes, for instance. And if you look at it, like with Robinhood, one of the fastest growing fintechs, their highest grossing product is actually the retail options market. I don't think it's unrealistic at all that perps could be just as large, if not larger, in the US, and the CFTC is laying a framework for that. And then beyond that, there's a lot of cool stuff that you can do with the Clarity Act and newer regs coming out. So excited about a whole plethora of things in the future.
So for Bitmart, it's a little bit different, I guess, because having been on the venture capital side, I think the focus was sort of more closely aligned with what you had mentioned. But for Bitmart, we're on balance sheet investors, and we typically focus on sort of more strategic investments, right? Not necessarily only token only. Sometimes we'll look at sort of complementary products and those that we would want to either potentially partner with, or they're products that we would like to use. So a good example would be, let's say, liquidity, something like a folks finance, right, where you're sort of solving for fragmented liquidity. And as you know, you can't really ignore the on-chain side of the business, and that's that's an area that all centralized exchanges will have to answer one way or another. So something like a folks finance certainly makes sense. Another, I think something intent-based, something like a Hey Elsa type of AI sort of crypto play, where it really helps you. You can speak or provide your sort of whatever actions you want on chain, and it sort of simplifies the whole user experience. I think something like that's also pretty interesting. And then on the payment side, I think one that was pretty interesting, something like Next, right, where it's fully backed reserve-based blockchain bank, where you have 24/7 settlement, really solves a lot of the B2B issues for on the supply chain finance side, for example, on the FX side. So I think all those are sort of the businesses that we would be looking at potentially investing in. So it's really not necessarily, are we looking for a 100x? No, we're not a venture fund, but certainly there's businesses that make sense for us to partner with, use their products, and I think those are the ones we'll focus on.
I guess just on top of that, besides the strategic investments, because we definitely want to learn about your opinion on tokens, right? I guess as Bitmart for listings, do you have specific area that you think is going to be like the next big theme that can bring in more users for like trading users, active users?
Look, I think on the listing side, our process does not change. So anything from meme, layer 1, layer 2, DeFi, I think that's sort of pretty standard. What I will say is that as more RWA, real world asset tokens come live, it's going to be different, right? So you kind of sort of have to look at it from more of a different lens. So in a way, we need to conduct diligence slightly different. Folks with not just a Web3 background, but a financial background. And why I say that is, let's say you're looking at something that's private credit in the back. You still need to do your diligence as you would any other, as you would the fund manager, sort of the strategies, the ratings. If there's sort of public ratings behind some of the credit facilities, so you really have to increase that financial expertise when you're looking at new listings on that side.
Thank you.
And on our side, I think you guys said most of the interesting bits. So we tend to take a similar approach to you. We invest from our own balance sheet. We don't have external capital. We invest in strategic partnership mostly, or in tools that we want to use, we want to integrate. The biggest focus has been around speculation, so DEXs, derivatives, perps, also potentially spot. From our perspective, it's very interesting. We are building a network of chains. They're focused on predominantly enterprise adoption. Interoperability is going to be an interesting feature based on zero-knowledge proof instead of intermediaries. And this allows for some of this project to then leverage the infrastructure, become central to the network, and offer services to the entire network without having to integrate everything. So we try to to find application that kind of fit this bill. Another example is use cases of stable coins, like international payments, remittance, FX, treasury management. All of these things are very interesting. I personally think there's going to be a huge boom in this specific sector. So this is also likely a very good investment on top of being very strategic to what we do. And the final thing that we focused a lot is RWA. So ZK Sync is one of the largest RWA chain in the world at the moment. And one of the reasons is compliant, privacy, focus on institution, but the other is also the fact that we focused very much on this subsector that we find is going to be very, very, very useful. And another one I mentioned that we haven't found yet any kind of suitable investment, but it's going to be like on-chain asset management. So there is a lot of work that is being done today around Vault, a little bit of improvement that is still required, but once it's there, this I think is going to be another very interesting space to deploy capital, and that will grow very much.
Right. So we talk about token investment. As of now, 80% of the investments in crypto is still in tokens, but we're definitely seeing a trend of doing more equity investments, especially for exchanges like Bitmart. You're making strategic investments, holding their equity. So are you guys doing other type of equity investments, like for example, DAT companies? What are your views on that? And when you are investing into a team who's thinking about launching a token versus just holding on to equity, what's your advice?
So we are doing both. Actually, we have invested much more in equity than in token so far. And personally, I think there's going to be a tendency to see much more equity going forward. And I think eventually we will have entities issuing equity on chain, which will basically kind of have the two kind of side converge. But for now, I think the token needs to have some use case. So if the token is used for fundraising, it's debatable how efficient it is versus just straight equity. So the advice that I would give to any team is that if you are using crypto as a tool to generate income, there is a lot of good reason to not launching a token, probably never. And we, for example, as an investor, will be perfectly happy to deploy capital in projects that are using infrastructure, either directly ZK Sync infrastructure or application built on top of ZK Sync, in order to generate traditional returns, and we will be holding to that equity and work with the team on that basis.
Yeah, well, it's actually kind of similar to what we were saying, behind the stage earlier, how sort of equity and token, it's kind of, starting to look very similar because, if there's value accrual back to the token, even before all this, I think you had that revenue meta, right? And everyone, okay, what's the value accrual coming back to the token, and what does it look like versus equity? I think for the most part, times have changed. Yes, this is a very momentum-driven asset class, but at the same time, I think it's about the your average retail market participant has matured. I think they've learned and they've evolved. That's why when you look at crypto Twitter now, guys are looking at, what's NVIDIA look like, right? It's not just looking at the charts. They're looking at financial metrics. They're looking at ratios. They're looking at, all the stuff that a typical equity investor would look at. So, in my opinion, the 100x's, right? Can you find asymmetrical upside? Sure, in a certain market, maybe. But are you going to find a lot of those opportunities? Probably not as much. So to me, it's really about just the fundamental business, what you're getting out of it, whether or not it's equity or tokens. It shouldn't really matter. It's really about what you can expect as as the business itself. And I think also tokens worked in a world where a lot of these early stage, safes aren't really equity, right? But now you can theoretically have tokenized equity even for, capital formation, I think is, that access is expanding. So I think as regulations start to move, I think you'll definitely see more reason to get involved on the equity side than just purely tokens.
Yeah, no, I think you nailed it. I'll keep it short. I think specifically, altcoins didn't catch a bid this cycle, and there's a very clear reason why. There used to be a liquidity premium that exists, or the token premium that existed for just launching a token. But it's very clear that neither retail nor institutions want to bid things that aren't of fundamental value anymore, which is why you've seen in this last cycle things like Aave or Maker or things like Morpho, Athena, Hyperliquid. These types of tokens will do better because there's a real business with real growth and real cash flows that underpin it. The second thing I'll say is, I think you nailed it, the delineation between tokens and equities. I think it's a very, very over-indexed discussion. You need to build a good business either way, and your choice of using a token or going the equity route I don't know how big of a difference it'll make at the end of the day. A good business will do well either way.
Yeah, makes sense. So even for early stage crypto funds, we're definitely leaning on to more like real cash flow business, right? And then it really depends on what the value is accrued by the equity and what value is accrued by the token. And then there's another compliance part where it can't be a security token.
Right.
So welcome Yan. So quickly for the past two questions, we talk about the theme that you're investing in the next 12 to 18 months and what you're thinking between equity investment versus token investments.
Yeah, so at Spartan, we actually have quite a few different businesses. And even on the investment side, we have 4 different strategies: 2 focus on venture, 2 liquid. One is directional, the other is market neutral. So we definitely see a lot of opportunities are moving away from the primary market into the secondaries. And even we're launching our market neutral strategy this year because we definitely see a shift in people valuing liquidity more so than ever, and the liquidity is actually becoming a key factor in underwriting your opportunities. Because for venture investors, you used to be locked up for 4 years and with very long vesting period, whereas the market is changing so fast where you can't really accept that kind of vesting anymore. And the market makers and exchanges are actually getting much better terms and much better liquidity when they're kind of launching the token within last 12 months or so. So we're actually seeing we're less focused on primary investment nowadays because of that, and we are actually seeing. I think people are also curious about price discovery and how the market will actually price a token. More so than before. Before, maybe you're just waiting for the token to get launched. You kind of feel like it will launch at a very high FDV, and maybe it will kind of drop down a little bit due to the initial sell pressure, and then kind of stabilize. But now people are actually much more skeptical in terms of what's the launch valuation is going to be, and therefore people are more willing to wait for the token to launch and then to be priced by the market. And there's a liquidity profile to indicate the demand on the market. And then you can underwrite that liquidity into your investment thesis. So we actually see more opportunities in the directional and market neutral opportunities. And in terms of theme, I actually think, echoing the panelists, that it should be things with actual product market fit and revenue generating. So I think at some point we're looking at the market earlier this year, everything is kind of being a write-off except for those tokens with either launching a DAT that's generating the demand to buy the token, or they actually have significant amount of revenue and they're also doing the buyback. So everything in between is kind of just write-off for us. Or not just us, we spoke to quite a few liquid funds. That's kind of what the consensus were. But I think the market is also changing quite a lot from there. So I don't think it's going to be a narrative-driven cycle, or from now on, in the next 12 to 18 months, it's probably going to be more fundamental-driven. So people are more risk-aware instead of risk-off. Yeah.
Great. That's kind of my next question. I want to ask about your risk appetite and stage you're investing in. As 2025 is on the record to be a huge year for us in crypto, and we're seeing over 100 M&A actually happened in the market year to date. And as we're saying, that institutions are definitely coming into the market. A lot of big opportunities happened. So what are you guys thinking of in terms of investment, stage-wise, risk-wise, and token, liquid token investment versus your early stage primary market investments?
Yeah, I'm happy to start. We are an early stage crypto fund, so we prefer pre-seed to Series A stage deals. I think our heuristic for investment is just pretty straightforward. We like investing in really, really good founders building ideas where they have asymmetric insight that have very asymmetric outcomes. So that's what we're really excited about. In the liquid market, we're not so active necessarily, but again, we would consider it if we see something that has asymmetric upside, which I do think, especially in a deep bear market, there will be a few projects that have really good teams that continue to ship that will be monstrous in the next cycle. So yeah, that's what I would say.
Yeah, for us, in addition to sort of the more strategic investments on balance sheet, we do have plans to launch an investment also on balance sheet, but a separate sort of bucket for investments. And still undecided as to whether or not it's going to be early stage or sort of a little bit more mature. But what I will say is that we're not going to, I don't think it would be focused purely just on tokens. I think equities, if it's an equity deal, makes sense as long as the business model is viable, the potential product market fit, so on and so forth. And also I think there's the early stage investor sort of pool, I think, is pretty crowded, especially from a lot of the funds that have vintage 2021, 2022, fairly crowded. So when I see funds that are looking to raise these days, it's always multi-strategy. It can't just be venture investment. They have to have some sort of liquid component, OTC, and on that basis, I think you can probably raise a fund, but not on a very difficult on a standalone basis. And I think the where it's less crowded is obviously sort of the later stage fund. So I would think that there's more opportunity there, especially in today's market where folks want to see numbers and they need to sort of evaluate it more in the traditional sense rather than just saying, okay, well, this is a comp to this layer one, and it's trading at this ratio or whatnot. I think sort of using comparables to kind of guide your where you think the valuation range should be is something that is. I'm not saying it's falling away, but it's definitely not the only. I think that's just one of many things to be considered.
We are also relatively early stage. We do seed, pre-seed, we do Series A. We could opportunistically do also, slightly later stage, but we have never done it before. In terms of risk appetite, we personally feel there's probably not going to be a better time to invest unless there is a massive macro shift. At the moment, there is so much potential energy that has been built into crypto, and with the current reaction of prices, is probably a good time to invest right now. To go back a second also on the points you were saying before, I personally think it's great that we started to put into focus revenue. So an investment that needs to have cash flow, investing in narrative, I don't think it makes sense at all. It's an oxymoron. So we need to have at some point visibility on this cash flow. I personally think though that very often the pendulum is swing way too much on the other side. So some investors are now looking to recover their investment in a very, very short period of time. And typically there is a trade-off between being Amazon and paying your first dividend after, 28, 35 years, whatever, which of course in crypto is an acceptably long period of time, and returning all the capital to your investor within 6 to 12 months. One of the two becomes impossible if you take the other approach. And so I think there is space for those investors that try to find the right point between pure narrative at some point, maybe when we change the world, the type investment that doesn't make too much sense, versus, I'm investing $1, I want $1 back in 6 months or in a year, which also I think it doesn't make sense. It just extracted too much from growth that instead could be there. There is some sweet spot which we'll need to find. It's probably somewhere in between these two extremes.
I think I'll add some perspective on the M&A sides, because as Spartan, we have both the asset management business where we run the funds, we also have the advisory business where we actually advise M&A transactions as well as token fundraisers and private fundraisers as well. This year has been a huge year for M&A. You see all these larger capital allocators like Ripple, Coinbase acquiring different types of products across different stack. Coinbase acquired Echo, which is like a crowdfunding platform, and Ripple did Hidden Road. There are a few other transactions, including one of which we just recently announced. Paxos acquired Fortify, or the sell-side advisor for Fortify, where it's a stablecoin issuer acquiring a wallet infra, basically. So you do see a lot of consolidation in terms of the whole financial rail, or like you see all these neobanks coming up. So a lot of the exchanges and also larger strategic player are kind of thinking about the stack. Like if they wanted to future-proof themselves as a leader in this world where TradFi and DeFi are kind of becoming more and more converging, and how do they position themselves? Do they have the right infra on the wallet side, on the payment rails, and all these transaction primitives? So they are actively looking at projects, and then people who are who raised at a very high valuation in 21 and 22, now they are more realistic with their valuation expectations when having all these potential M&A conversations. So I do think now is actually a good time for consolidation to happen. And so this year we've seen more activity on that side versus the token side for sure. But at the same time, I think M&A is a very interesting area where not a lot of people are looking at it. And both on the equity side and also on the token side, there are more token M&A happening as well. So including Layer 0 acquiring Stargate, sorry, but which they had a history before. But we do see some of the foundations are also becoming more and more acquisitive, including sorry, blanking out, but they are actually thinking about how do they acquire either an application with user base to boost their bottom line, to boost the revenue number as a result, or they're also thinking about strategically speaking, as a foundation or as some of these layer 1, layer 2s, how do they position themselves when, let's say, institutionals are coming in and they wanted to engage in DeFi activities, for example. How do they work with certain L1 or L2? And do they actually need certain rails or certain licensed component to that foundation to actually have meaningful conversations? So I think those are being explored in the meantime as well.
Yeah, it makes sense, right? Like for acquisition to happen, maybe they'll be able to bring in complementary set of operational expertise from regional markets. And it makes a lot of sense in crypto. So let's take a moment to talk about DAT companies. It was definitely the center of the topic back in 2049 Singapore. So we have around 200 of the DAT companies as of now, and their peak valuation, equity value, was around like 170-ish billion this year, and recent drawdown now they're about 50 to 80 billion. But they've become quite significant as they're holding 4% of BTC right now, 3.1% of Ethereum, about 1% of Solana. So have you guys done any investments in DAT companies? What are your thoughts on DAT companies, or are you even thinking about launching one?
Yeah, I personally haven't done any DATs. I think as an early stage crypto fund, you're supposed to optimize for more asymmetric outcomes. I think DATs are not that. And then I'm also not a big fan of DATs generally. Most of them functionally are designed to be able to trade above MNAV, and then ultimately most of them were exit liquidity for a lot of these in-kind contributions. But I would say they're not all bad. Like a good example of a good DAT would be a type of DAT that acted as like a pseudo ETF for a token or an altcoin that couldn't actually get an ETF. That's potentially interesting as long as it was structured correctly. The other thing that I would note about DATs, which is interesting, is a lot of these very large multi-billion-dollar DATs, it's interesting to see, one, what percentage of that is in-kind / locked tokens versus actual cash contributions where they're bidding the underlying token. The other thing which is really interesting is determining what are they actually doing with the treasury. Are they staking it? Are they deploying it in DeFi? And actually seeing kind of the PvP games these DATs play as far as which one of us can get like the highest yield and become that canonical DAT which trades above the MNAV, whereas almost everything is trading below the MNAV. And then probably the last interesting thing I'll say is a lot of these DATs, again, are trading below MNAV. So I expect the largest DATs, or people who can basically consolidate a lot of capital, they will probably go out and basically buy out these DATs because there is a little bit of an arbitrage there if they're trading 10 to 15% below MNAV. So yeah, kind of like a brain blast of things related to DATs, but not my expertise.
Same. It's look. It's not my expertise. I remember in my prior role at the VC, we had looked at a few DATs. Ended up even passing on something like MetaPlanet, which I think it makes sense from a tax perspective. If you're a if you're the sort of buffer and the savings you get from investing in that vehicle versus buying directly. Having said that, I think like you just mentioned, it comes down to how you're going to generate that additional yield, and are you going to and also, I think the next step is really for these guys to look at for example, if you're a Solana treasury, right, looking at sort of the top ecosystem tokens and ways to really kind of generate some additional yield. But for the most part, to me, is as a market participant, it's the large majority, I would say, it's really just for liquidity. I mean, let's face it, in the altcoin market, liquidity for the last year has not been good, right? It's just too fragmented. I mean, there's no barrier to entry to launch tokens anymore. And what's the next sort of best thing, right? Public markets, and I think that's where you sort of had the most liquidity. And again, like you said, being able to contribute locked tokens in kind, that's also a way for some of these foundations to exit. So will we invest in DATs? No, it's just not complementary to our business. We've had offers, towards the end of the cycle where folks wanted to, do some. I mean, at that point, it's really just sort of the guys that missed out on that initial wave, looking to, trying to see if they can capitalize. And I think, in retrospect, I think that was a pretty loud signal that this DAT thing was, for the most part, over.
Same. We're not investing in DATs. I think the value of DATs is market access for US retail, but ETF will come and will probably erode this value add. Two is access to markets that are not accessible for crypto project, like the debt capital market in the US or the convertible market. So these are interesting, but competition, the size will in itself erode this benefit, because then the few players that are deploying will spread across large amount of DATs. I'm very excited to see DATs starting to be economic DATs, as you mentioned. So instead of just being holding companies, starting to deploy the capital in a productive fashion. And I think this is long-term sustainable, but it's also difficult. And many of the team are not really set up to do this. Many were really set up just as an exit strategy for the projects, which it makes them by definition almost not a good investment. And another interesting aspect will be M&A, in my opinion, to see among DATs. So big DATs buying small DATs. This is another way to add quite a lot of value in the short period of time. But then again, this is a shelf life. At some point, they will finish the consolidation. But I think it's going to be interesting to see some competitive dynamic there. So when a Bitcoin DAT buys a Solana DAT, liquidates Solana to buy more Bitcoin, for example, let's see when these things starts to happen. And then the final is probably actively manage DATs, which act almost like a fund until proper fund structure starts to appear, where instead of a single name, the DAT is a basket. It takes a thematic approach, like an RWA DAT that focus on, in general, projects on RWA, and may also buy the underlying assets. They may buy the project. They may do different things. So this could be quite interesting when they start to appear. But for now, there's very little or no such things, to the best of my knowledge.
Yeah, we've been tracking most of these DaaS companies over their life cycle. I think this year has been a DAT year. I think the first DAT was really strategy, like Michael Saylor, and everybody start to copy the playbook initially. It is, in my opinion, on the foundations or on the project side, is a way to go public. And then on the user side or purchaser side is more like a lever play on the underlying asset. And so that's why the MNAV becomes a very important metric to evaluate whether your Bitcoin per share or like token per share has to be at a meaningful level for you to make sense to purchase the public equity, essentially. So essentially you're seeing that people are injecting tokens in exchange for equity. But in the meantime, earlier this year, there are also these equity being tokenized and putting on, like different exchanges. Coinbase is like tokenizing their own equity as well. So I do see there's a little bit of convergence between token and public equities. But I think in the meantime, people also underestimate how difficult it is to deal with public equities. And there's significant costs involved in launching a DAT. You're essentially, either, depending on how you do it, but essentially you're getting a shell on NASDAQ. And you're trying to find the right leadership team. You're trying to secure, that transaction. You have to know that negotiate with the existing management team in terms of how you want to structure this, and you want to engage investment bankers or like placement agents to deal with all these regulations involved in basically going public in a way. It's not as difficult as IPO, but then essentially you're still kind of going through all those hoops, and significant costs involved. So what we thought was possible was only the larger DATs with meaningful larger cap tokens like Bitcoin, Ethereum, and Solana could make sense. Then for all those smaller ones, even its large cap like Hyperliquid, et cetera, might not do as well. And also the larger ones, you probably wanted to have a very strong sponsor when you launch the DAT. Pantera, for example, led quite a few Solana DATs, and then their investors who are investing into these major major DATs that have significant exposure into the underlying large cap tokens. It kind of played out like that. I think the smaller ones are kind of not doing so well because you don't have the necessary scale to sustain it. There are significant costs involved, even just running that public company, as you know it. And counter to the other panelists' opinion about larger DATs are starting to acquiring smaller ones. I used to think that, but over the last few days, spoke to a few larger DATs companies. They're actually telling me that it doesn't make sense to acquire the smaller ones because each one of them has their own eccentricities. They wanted to stay on board. You have to really absorb their entire operations, pay their leadership meaningful salary, and while also acquiring their token, they also kind of expect a premium when you're acquiring the smaller DATs, even on the token they're holding. So it doesn't really make sense for the large DATs to actually do it. So I actually think probably the smaller DATs will just eventually die out over the next 12 to 18 months. Yeah.
And maybe to add, do you think eventually this may even become a downside risk? Activist investor, if there is enough discount, they could buy the entire thing and then shut it down and maybe short the perp for a while they do this, and then just dump the token and move on, a la Gordon Gekko, where then it becomes a massive tail risk because they will not care about the impact that this has on the token, on the team, on the project, or.
Well, I think if they don't purchase it, the smaller ones would just sell back the token they hold into the market. So that will actually create a significant sell pressure on the token itself, for sure. But I think there's a break-even point when if they did offer like a discount on their token holdings so that it makes sense economically for the larger cap DATs to acquire them, it might still happen. But it has to be very strategic, and another point is on the yield. I used to think that more and more DATs are going to care about yield, but I spoke to a few larger ones. They said, the yield component is very minimal. Like they don't think they have to acquire like a yield generating company specifically just to boost their DAT performance, because their primary goal is still just to buy and hold the token, because that's the narrative. They have to keep it very simple for the public because they're now public listed companies. If you start to do all these other things, it just convolutes the message. So maybe the next iteration of the DATs will become more, token native, or people are actually more open to that when the market is more educated. But as of now, I don't think that's going to happen. Yeah.
I think a significant amount of company who raised capital for DAT, they haven't started buying yet. I think the downdraw doesn't necessarily have to be bad for them. So they still are holding the capital. But when we are looking at that companies, so first, like original first mover advantage is very, very clear. So like Korea, like the States, like Japan, with tax benefits, I think it makes a lot of sense. But like then later companies, I think eventually they'll have problems struggling. Or companies that have a very clear advantage of keep and continuing raise a lot of capital. So that's definitely another thing. And then we look at companies who have real continuing cash flow, so have a real business inside of that company instead of just yields and buying tokens.
Yeah, I'll add to that. We spoke to a few larger foundations who have both the equity business as revenue generating, as really doing very well. They also have the token component, the network, that also accruing value to their token. So I think the next iteration of that could be that they're using the DAT as a way to unify both their equity business and their token business. So to hold that under one umbrella. So in the end, every company, every foundation will just become a DAT, where you have access to both the public equity source of capital, but you also have meaningful way to manage your treasury within this umbrella. That will actually simplify a lot of things. So maybe that will eventually happen, but I don't know if this is going to happen in the next year, or so.
At least the governance of the DAT comp needs to be clear, like who has the rights
Exactly.
to buy, how are you buying, how are you selling, all that kind of stuff.
Yeah.
Okay, so we have time for one more question. I want to ask about liquidity. That's one thing we're talking about, continuing talking about on this stage. And take advantage of our panelists here. We have liquid funds, we have VC, we have foundation, we have exchanges. So from the exchanges side, you definitely see where users' money are flowing into, who are users, what are users buying, right? And then for liquid funds, you're definitely seeing where the larger capital deploying into liquid tokens right now. And then the foundation, and then for the VC. So I want to ask you guys about, where do you think the liquidity is going right now? And where do you think is going to be the extra liquidity coming into the market to make this bull run keep going? Maybe you start with Netter.
Blue chips. I mean, it's. I think most of the action has been, migrating towards the higher quality. Not even a top 10, probably I would say top 7, top 8. I mean, sure, you can go down the coin market cap list and figure that list out, but it's certainly a lot of smaller tokens are sort of anemic, to say the least, and in terms of where the liquidity is going to come from. Look, I think as I mentioned earlier, right? There's just way too many tokens out in the market. I think the liquidity fragmentation has gotten to a point where you really need I would say that there's those that want to be in crypto, those that want access, the retail side that wants access to crypto. The majority already have access to crypto. Have a lot of them gotten liquidated? Yes. Have a lot of them decided to exit the market? Probably. Everyone keeps on talking about the next wave of users, the trillion users. Look, I think it's very clear that the bid that's going to matter is really going to come from the institutional side. I mean, I think similar to the traditional equity markets, that's where those bids are the ones that ultimately matter. It's the institutional bid. I'm not saying that there's not going to be new retail flows coming in. I think that that should still happen. But I really think that going forward, you really need that institutional flow to really move the needle and make a difference.
Yeah, I mean, I think Bitcoin ETH Sol will continue to do well over a long enough time frame, maybe. My opinion is simply, I think liquidity and capital will follow good projects, good companies, and sometimes they may not even need an institutional bid, which is crazy. I still think Hyperliquid's a great example. $30, $40 billion market cap, barely any institutional bid. It's good project, good cash flow, good growth outlook. Liquidity follows, I think.
I think on the institutional side, I agree. It's probably going to go to the blue chip in different formats, different strategies. On the retail side, I just want to add one more point of, it's not that retail are not really investing anymore. there's still retail liquidity coming in. For example, we just advised another token kind of IDO or direct listing on DEX, which is Aztec. It's an Ethereum L2 that focuses on privacy as well. So they actually did a continuous auction on Uniswap. They raised 60 million capital despite the market condition, and it's a completely market participant-driven price discovery. There's no like centralized exchanges or market makers involved. It's purely, like you bid and then you set a cap on the valuation that you want, and then everybody just get a fair and transparent token allocation towards the end. So I do think the ICO is probably going to be another meta in the next few years, especially around for retail to come in. Retail liquidity appreciates transparency as well as ability to know that they're not going to become exit liquidity of the larger like VCs or these other market participants. Yeah.
And I agree with everything that was said. Maybe just to add another potentially source of liquidity soon is ETF and in general adoption of crypto inside portfolio construction. So today it's BlackRock and Fidelity have been writing a little bit about it, and everybody was very excited. But I don't think practically many allocators are really incorporating crypto as an independent asset class. When this starts to happen, then money becomes very, very big very quickly, and there's going to be a big institutional push. There's also an aspect that many institutions cannot buy single name. They cannot do single name allocation, and so they will need baskets. And so that's where, again, ETF, regulated funds will come in, will be quite useful and potentially bring more liquidity. Where it will go, probably, the big names will benefit a lot. We saw this also in equity, in the S&P. There's many examples. It's Pareto distributed. And then it will go into those alts that have embraced the revenue story and are building a story around revenue, either immediately, ideally, or over a reasonable period of time, and there's visibility on these coming in.
All right. Thank you guys so much. All right.